Hello, everyone. Corey Schrader, Black Creek Wealth Management. Hope y'all are doing well. Just wanted to take a moment here today to give you a couple of ideas on some trades that I'm looking at this week. Of course, the biggest thing, big disclaimer, is this is for educational purposes in and of itself. So, if you are jumping into this, definitely take caution, but definitely want to make sure that you're aware of the different levels and things that I look at. Again, from an educational perspective, if you are looking to get into it, I always like to remind everyone I do teach people this, but I also do it for clients as well. So if you do have any questions or you're looking for some help, you don't have the skill, will, or time to want to do this, reach out. I'm here. Come be a name, not a number. So before I get into everything this week, I wanted to let you know that this is going to be a pretty chaotic week. It's been a chaotic, really 6 weeks, and it's not going to calm down anytime soon. There's a couple of things on the horizon. We have Davos, which is an economic forum over in Switzerland. So you have a lot of big ups that are talking about, what's going on with the economies? How are we going to, increase global growth? How are we going to keep from a global recession? How are we going to reduce import prices on food because we are potentially going to see some shortages? So there's a lot of things that are going around and a lot of concern out there. If anyone who's been investing and doing this for a long time, inflation hasn't been really a concern, or even really bond prices haven't really been a concern for the last, 20 years. But here we are. Things are changing. And with that, if we don't change, we will die. And it is one of those things where I look at it from kind of like the ocean. And I apologize for the horrible analogy. Do you really think a stingray finds food if there's not a lot of movement? There's not a lot of churn? Not really. It's pretty calm, consistent, right? So we're going to look at it from that point of view, in the lens of when there's a lot of murkiness, when it's really not clear, that's usually a good opportunity to make some good money in the short run. Because again, this is a trading mindset. This is not investing. This is trading. Now, you can use trading to look at business cycles, look at secular trends, things that are 1, 2, 4, 5, 20 years. It's what I do from an asset allocation perspective, which is, again, different from the trading that I do for clients as well. So let me just share with you, and I'm not going to run this too long today because I know everyone's busy and, hey, Corey, just get to the point, right? So let's do it. So a couple of things that you want to look at this week. I am of the mindset of anything with a high PE, really be careful. And what that means, that's just price to earnings. That means typically you have a Google and Amazon that's shooting at 70, 80 PE. They're not even there anymore. They've seen a lot of retracement. Amazon being one of the prime examples of this. I mean, look at this bad boy. And this is looking at it on a weekly basis over a very long time period. So if we look at some of the things that I'm looking at this week, and I'm actually not touching Amazon, but I think it's great from an education perspective to look at levels, resistance, support, trend lines. All these things factor into what is the sentiment, because that's what we care about. Now, the biggest thing that I'm going to share with you with Amazon and Google that I'm looking at and why I'm not touching them right now, I was using them very much in the last year and a half, and I've slowed down using them. One specific reason. There's going to be a split that actually happens, and this is for Amazon. Google's another date, but Amazon is going to be splitting on June 6th. This is going to be an amazing event that we're really going to want to make sure we take advantage of once it happens, because what's going to happen when Amazon drops from $2,000 a share to $100 a share, from 2,000 to 100. No value changes, just price changes, right? What is the average investor who's been wanting to buy Amazon forever, but felt it was always so expensive, right? Well, now it's $100. I can show you, and we can go back and look at Apple. When Apple split and went to $100 a share, that thing has just continued to just go and go and go. So it's not from a making money perspective that, hey, it's going to drop to $100 and, that's going to destroy value. No, it's actually going to create value, because from a psychological perspective, those people who wanted to buy Amazon at, $500, $600, $700, which if you go back 4 years ago, that's when it was. Now they can buy it at $100. So your average investor is going to have a lot more opportunity to get a hold of Amazon and Google, which is definitely going to push prices up because you're going to have momentum and you're going to have a lot of good positive bias behind the company. Because again, at $100, hey, it's $100, right? I can throw $100 at it. I'm not going to throw $2,000 at it. See what I'm thinking? So overall, when you look at it right now, and again, I look at momentum, I look at trends, I look at what's going on. And right now, if you're in the growth mindset of the world and you have less than 5 years to really invest to achieve a house, a car, maybe you're retiring in 5 years, growth shouldn't be your main purpose right now. You should be looking at value. You should be looking at things that are going to be more stable. That's why I look at, when I do my trading, I look at things that have a low PE, like your CSX, like your Caterpillar, like your Home Depot, your Lowe's. Now, caution, your Home Depot and Lowe's is going to be tied to housing. It's going to be tied to interest rates. As interest rates go up, people aren't going to be buying houses, which means they're not going to be doing work to their houses, right? Now, if we see a storm here in Florida, usually that bodes well because people need lumber and those costs have been through the roof over the last year. So these are things that you got to be thinking about. What are the external or exogenous forces that are going to really impact this stock? Because as of right now, if you were to look at Home Depot, for an example, this is the 200-day moving average. And I use simple, triangular, and exponential moving averages because each one of them has different benefits. Your simple moving average is going to be just an average of the last 200 days. Everything has equal weighting. Your exponential moving average gives greater weight to more of the current pricing, and there's a calculation behind it, but it tells me when is some of the trending going to be happening much sooner. And then you have the triangular, which most people aren't really aware of, and that's where it actually takes out the beginning and the end and really focuses on the core trend, right? So that would be great to know if over the last 20 to 50 days, what has been really the core trend, and we're removing some of that really big noise to the north and south. So for me, when I'm looking at Home Depot right now, and I've recently jumped into it, so my price right now is at 165 for the type of trading that I do, so more of a spread trading. You can clearly see, and again, this is just by using some of the charting. I'm not worried about the fundamentals of the company. I'm just worried about the price movement, the price action, what happened, right? You can clearly see there is a little bit of a ceiling where these prices hit a couple times over the last, hit them here, basically touched down when we had a really, really heavy week last week. So there's a little bit of what is called support and resistance. So I know that there will at least be some hesitation by the buyers and sellers at that point. Now, with the way things are going on right now, we want to look at other indicators like how much volume is going on. Is there a lot of people participating? Is there a lot of selling going down? You get into what I like to look at, and I mentioned this on another, you can clearly see there's more of an airplane landing coming down. The velocity of that drop is definitely starting to trend out and starting to, kind of an airplane landing on a tarmac. So you're starting to see where, okay, there was good selling pressure, buyers push back up. There was good selling pressure, buyers push back up. The heavier the volume, typically the better you're going to feel a sense of what is that's going on, right? So again, when you look at this, it's still in a bull trend. It's above the 200-day moving average. It is below the 50-day moving average, which isn't a positive. It's more of a neutral environment. And really what people really like to look into is when you have that 50 cross the 200. And again, this is just the way people look at it. It's called a death cross, or the converse one is if the 50 goes over the 200, it's a golden cross. And usually it tries to tell us that there's going to be a significant downward trend over the next, 2-3 months. Well, I've seen it plenty of times. It typically does not indicate either. And I can show instances where both of them really just don't play out. So what I will tell you right now is the market is in a little bit of a negative funk. There is a lot of optimism, and that's why we're seeing the market rally, especially today. Again, I said this before on another one, there's a little bit of a dead cat bounce going on. You can even look at what's going on with the S&P 500. I was talking about this. You see a lot of movement. We tried to stop there. A lot of buyers and sellers tried to hammer out the bottom. Didn't really happen. Against more selling pressure. But now we're starting to see more of this uncertainty. Should we be higher? Should we be lower? These are all things that traders are looking at that we can use to make some money and even protect ourselves, because we don't want to necessarily try to time this overall if you're a long-term investor. But if you're a stock trader or an options trader like myself, in addition to long-term management, you can use these signals to say, is it a positive environment? Is it a negative environment? How can I profit from that? So a couple of things that I would have you look at this week. And again, I don't want to just kind of tell you what I see and how I've been trading this. Right now, Apple, and they've mentioned this many times on CNBC, and don't discount what they are saying, because those are the people that are telling other people how to drive their money, right? So if they're telling them, we should definitely listen. Now, we're going to look to see, can we get better information and how can we read these better? But as of right now, they're calling for about 125 on Apple. I'd say give yourself a little bit more wiggle room. If there's more supply chain issues, really you might want to look at maybe 115 on Apple. Again, depending on what type of trade. If you're looking to get into it, maybe sell a put. If you sell a put and it drops to 115, you get assigned. Guess what? Now you own the shares at 115, and Apple has severely corrected from 185. And I'm just, for my own edification here, what's 115 from 185, right? 115, 185. You're looking at a 38% drop in the Apple from its highs. Now, you could say, I want a dollar cost average. Maybe I want to buy Apple twice this year, maybe at 115, 105, let it drop, sell that put, let it assign you. Now you got 100 shares, assuming you just do 100, and then you do another 105, it drops again. Now you've got 200 shares, but you've averaged your cost basis and you have a lower cost basis. So that's something I would look at. For my friends who love Ford, okay, this one here, they are definitely talking about just having problems with EV and lithium and all these other kind of things out there. What I would tell you is if you're owning Ford, and a lot of people have owned Ford, GM, all these kind of things, think about covered calls. If you're owning these shares, they are ingrained in the American economy. One of these down the road may eventually be absorbed by another. It is in, at least from a annual perspective on a weekly basis, it is still in a bull market. You have a 200-day moving average. You have your 50-day moving average. You even have your shorter term indicators, the 20, that's still sitting above the 50. It looks like it's trying to fight through that. But what I would tell you is you could easily hold, if you are holding this is a covered call kind of a strategy, sell way above, take advantage of those premiums and let that price oscillate. There is a little bit of a floor to it. Ford is Ford. I'm not a huge fan of getting into automotives, but if you do have it, you might as well make some income off of it and boost your returns. It just makes sense to me. The last one I'll talk about is NVIDIA. So again, I'm not digging into the fundamentals. I'm just talking about the technicals here. How can I trade this and make money, right? That's what I want to do. It's in the short term, weekly, monthly, quarterly, whatever. I will tell you from a long-term perspective, a lot of people believe that this is going to take, between NVIDIA and AMD, they're going to take over the world from a graphics processing perspective. So if they believe that, and they believe they're the best house in the worst neighborhood, maybe it's time to think of this long-term, look at their fundamentals. I don't know, but it has at least enough momentum where it's able to sit in that vein where you can have some confidence. At least there's some support there if you do jump into it. But what I would tell you is, again, anything with a high PE level, be careful. Use strategies that are not bullish strategies here. Or if you do use a bullish strategy, give yourself wiggle room to get out from it, okay? Because if you can, and then my quick 2 seconds on trading, reduce your absolute losses and let your gains run. It's all you need to do. If you want to be successful as a trader, don't listen to anyone else when it comes to how to manipulate your trades. If you are in a losing trade and you feel that the momentum is against you, cut your losses. Hear me. Keep those absolute losses as small as possible. Have a plan. Have a consistent strategy. Cut those losses short. If you have something running, let it go. put in infinite, trailing stops, whatever you got to do. But if you have something and you see it move against you and you said, you know what, if there's a 15 to 30% probability this is going to go down and that's your watermark, cut your losses and move on. It will work. And I'm going to show you in a couple of weeks how it works. Just stick with me, but hear me. I'm telling you. So when I'm looking at NVIDIA, there's a lot of different trades you can get into. Again, I would highly recommend looking at, you can even do bear put spreads where it takes advantage of the negative drawdown. But again, I feel like this is just primed to take off, going back up. So maybe look at some selling of some puts to maybe capture if you want to hold this thing long term. Again, I think 116 is what I'm looking at least from that deep support level. It looks like it's trying to settle out here right at about 145, 146. So that's about another $20 from here. So that'd be what, about 12% roughly. Calculator, I need to pull it up. So something to think about. What I will share with you one more time is, again, look at what's going on today. If we just look at the daily 1 minute, okay, this thing has been trying to go up, trying to get momentum. Market wants to go higher. It's going to settle down, not down on the day, but it's going to settle off its highs unless there's something else that's going to push us higher. So we are still in that range. I said this on my other video today. We're in the range on the S&P 500. You're looking at 4,100 to 3,850. We're going to sit here for a little while. Let's hope that we do not see any more conflict or an additional conflict with what came out today. But overall, just keep a level head through all this. This will pass. We will get through this, and we might as well make some money while we're here. If you have any questions, as always, reach out to me. I'm here to serve. God bless. Have a great day.